As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Tejas Shah from Spark Institutional Equities Private Limited. Thank you, and over to you, sir.
Yeah, thank you, Sagar. On behalf of Avendus Spark, it's our pleasure to host Q1FY25 earnings conference call of V-Mart Retail Limited. From the management side, we have today Mr. Lalit Agarwal, Managing Director, and Mr. Anand Agarwal, Chief Financial Officer. I'll now hand over the call to the management for their opening remarks, followed by a Q&A session. Thanks.
Good afternoon, ladies and gentlemen. Thank you, Tejas. Great to see you guys all once again in the call. Very happening quarter in terms of political scenarios in the country, in terms of the consumption or the change in the consumer behavior. So what we have noticed in this quarter, which is April to June, this is the biggest festival in the world democracy, which is the Indian election. And then a lot of hue and cry, a lot of election rallies, and a lot of media exposures, a lot of discussions for the citizens, which was largely around politics, and we all know about that. But anyway, so it definitely impacts the businesses also, especially the smaller districts and the smaller towns, and it also curtails some amount of money for the normal household to spend on other items. But still, the inflation rate continues around 5%, still on the high base. So that is still a problem to the Indian consumer and to a normal household, which is earning between 20 and 45,000 rupees. So that's the normal household that which we study and we try to study. So the market seems to become little better. Employment status looks a little better on the ground level. People are confident that there is definitely going to be better employment, because states are trying to rope in consumer and rope in the large amount of masses by giving a lot of good promises and newer benefits and newer plans even before election and now after election as well, because of the kind of results that we have got. which is also bringing in some kind of confidence in the overall market, which is what we required, which is what we require in the future development. So I think that's the good news that we are getting. The confidence index of the consumer is getting better. They believe that they will not be spared in the coming future. They will definitely get more employment, and their ability to earn and earn more is definitely going to sustain. Even on the skills part or even on the employment part, a lot of work has happened. So some of those good news. On the competition side, I think the competitors have been doing good. A lot of competitive activities have been seen. Always we see those activities. Still, people who are able to give good experience to the consumer and provide good quality and provide good variety and great experiences are able to sustain and definitely are able to grow much beyond what is required. So we are seeing those good positive signs in the market. The market definitely is there. It is all about how much market share can you acquire. And versus there are also other set of competitors who are also struggling. And largely, we have seen some struggle coming in also from the premium segment of the market or the upper middle segment of the market, where the prices of the premium brands operate. So we are seeing some pressure there. We are also seeing pressures on so-called value retailers who are still on the little higher edge of the market segment. They are also we have heard on reports of struggles also in there. But I think these are all temporary phenomena. People will get back to these the basic demand, and they will come back to their fields. On the other side, I think I think we have been trying to focus on our basic fundamentals. We have focused on these all agri generated markets and then largely impacted by agri. But yes, we definitely believe that these consumers are aspirational now, and they will want to consume better. They are much more aware of the audience, and we believe and we understand and we recognize that these consumers are no more the traditional consumers. They are definitely a little more learned consumers, demanding a little better fashion, demanding a little higher fashion, demanding the latest collections which is coming in. So some of those pieces we are seeing. Definitely consumers are appreciating all good things that the brand does or what we have been doing. As we have been speaking for the last 2 years, we have been continuously working on our internal processes, on our internal parameters, on our internal understanding on the consumer or even technology or even the way we source and the way we procure and the way we design and then the kind of quality that we would want to provide to the consumer and the experience and the betterment in the experience that we want to provide. Some of those initiatives which we were struggling in the last year are showing some results. We still believe that most of all of our efforts have not still been completely rolled out. We still believe we only have reached up to 50% of what we could have done, but still there is lot more that we have in plans that we will want to better and give this experience to the consumer. Now, consumers are ultimately worried about the product that they get, the prices that they get, and the experience that they have when they are shopping at the store or when they go back into the home and post-sales experience or the connect with the brands when they go back home or they are not coming to the store. How do you do that? So in that aspect, our Omni team has also really worked a lot. The LimeRoad team, including the offline team, they have really worked on very nicely on a product called One Click, which is actually giving a great Omni experience to the consumer, giving more satisfaction to the consumer. We definitely have a much better communication tool. We have integrated some communication tool. We have now 100% digital billing done at the store, integrating the customer or getting integrated with the customer on the WhatsApp account. So that is also giving a lot of personalization to the consumer and then definitely talking to them over a period. So some of these pieces and then also reaching them out on the digital medium, trying to create those fill factors. So whatever we have got is the brand trust, whatever the understanding, the trust on V-Mart, the trust on our customer, on our givings in the past and even today, has definitely showed up. Whatever we did whatever we were doing wrong and wherever we corrected, we got great response. We got really good trust and good feedback from the consumers. Consumers came out in huge numbers, and then they really turned up and then gave us the confidence of that whatever we are doing is on the right direction, both in terms of the fashion element, because that was a big change that we brought in terms of focusing more on the Gen Z collections, focusing a little bit more on the fashion and the changing fashion needs of the consumer, and understanding those and implementing those at an agile way in the stores. So some of those areas, and our special focus on quality, which we have been narrating for the last 2-3 quarters, has also shown a good result. So quality, the customer is recognizing and customer is appreciating those quality efforts that we have taken up. So all of these areas given together has really gave us a good input. So that's the area that we want to really focus on. We believe that our doing is going to definitely give us a outcome, and that is the potential that we look at in the market. The market is definitely very large. Market is too large, and we all understand and we have seen and we know that this market is becoming larger and larger as India is growing, and India as a position of India's position is very good. What we see in this value retail market, definitely there are more players walking into this market, but in that same rate or more than that rate is the per capita income growing, or is the per capita consumption growing at the fashion level. And there is definitely some shift which is happening from unorganized to organized, and which is bound to happen more and more. So that part has to remain. So it is more about acquiring our market share. The market is definitely there. So that's the plan. We would definitely want to focus on both the markets. Our approach on pricing at unlimited market in the southern India also has given us a lot of confidence. The customer has really understood what we are offering, and we are getting a lot of new set of customers and repeat customers from there. So good input coming in both from the existing stores, from new stores that we have opened up. We are really getting very good benefits from there also. So that's the part we are all into. We have also tested on one new concept in a town called Hubli in Karnataka, with the Line Road branded stores, and that we have just tried to pilot one store in trying to bring a little more elevated fashion, little more lighter density of inventory per square feet, which is giving a little more premium feeling look and feel, keeping the prices at the same level or even at the lower level, trying to create a niche experience for the new generation customers. So we are trying to do, because we saw some brands really getting good response, and that gave us a real confidence that the consumer need and the consumer approach towards buying great fashion is coming in not only from quantity, but comes in from more the way in which you are showing up the apparel and the way in which you show up the brand. So there is definitely, we believe that there is some amount of baggage that the brands carry, whether it is Unlimited or V-Mart. So we are trying to experiment that with our new third brand, which is the Line Road brand, which is more digital savvy, which is more nearer to the Gen Z audience in the millennials. So that's where we tested with one store. Till now, we are learning, and that from the learning phase, we would definitely want to experiment more with 4 or 5 more stores in this particular year, so that we get the confidence on this particular new initiative, and then we may try to then allocate some amount of budget in the next year, but that still we are under discussion. So that's what we have. Definitely, there has been some areas where we have really worked hard in terms of people, bettering the people's motivation, in terms of bettering their base salary, trying to retain them, working on attrition. That's one of the major areas that we have worked on, and that some of those stores or some of those markets where we used to have higher attrition, really attrition rates have come down. Those things also is really helping us in achieving the sales. And there's a very good incentive plan that we rolled out for the team. So some of those things is giving a lot of motivation also to the consumer. One more thing, all those stores which we always said that which were opened just before COVID and just after COVID. Some of those stores also started showing us good response. We believe and feel that some of those stores are getting rediscovered or are getting discovered for the first time because they never got a discovery time just after COVID and before COVID and around COVID. So that's the change that we are seeing in our market. Consumer are appreciating. We'll definitely talk about this more. Let me just hand it over to Anand so that he can give you a detailed guidance on the results. Over to you, Anand.
Thank you, Lalit, and good afternoon, everybody. As Lalit mentioned, it's been a good quarter with impact of the few changes that we have been busy doing over the last 2 years, starting to become slightly visible. Let me first take you through some of the key highlights from the quarter, and then we can open the house for questions. So quarter one typically is the onset of the summer season and is marked by a strong wedding calendar. This year was slightly unusual with no wedding dates, but despite that, we have seen good improvement in our like-to-like sales as well as the sales per square feet. On the sales front, we are seeing much better footfalls and improvement in total number of invoices cut, which is a strong reflection of the improved efficiency measures being taken by the company since the last 2 years. At an overall level, the sales grew by 20% for V-Mart and 5% for Unlimited year-on-year. The Unlimited sales growth was impacted in the quarter marginally due to the closure of 15 stores since last year. Normalizing these store closures, the Unlimited stores would have also grown by 18%, which is closer to the overall V-Mart sales growth numbers. The new stores opened in South under the Unlimited brand continue to deliver higher sales and profitability versus relative legacy stores in South. In the last 3 years since acquiring the Unlimited brand, we have closed 19 stores and opened 23 stores in South, taking the net Unlimited store count today to 78. At an overall level, while all states saw good growth during the quarter, but in particular UP, Bihar, Uttarakhand, Rajasthan, West Bengal and Karnataka saw relatively better traction in footfalls as well as sales growth. Another heartening fact evident is the highest sales growth visible in tier 2 and tier 3 towns and as well as tier 4 towns, geographies which form the biggest base for the typical V-Mart customer profile. The apparel ASP degrew by 3%, largely due to the product mix change as a fallout of 0 weddings during the quarter in North, while in South the ASP degrowth was a fallout of the strategic shift towards sharper and more value-driven product pricing that we have been trying to incorporate since the last 2 years. The price correction exercise which was initiated last year is already over, and we should see ASPs stabilize at these levels in the quarters to come, but for any product mix changes due to shift in weather or any festive calendar shift. The stabilization of the new warehouse in the last 5-6 months has also helped improve the supply chain efficiencies, which should see even further betterment in the months to come. In line with our strategy on making the LimeRoad business sustainable, we cut down on the marketing spends, which impacted the top line growth, which reduced by 33% year-on-year from 12 crores from 17 crores last year. Coming to margins, the gross margin for the offline business remained healthy while flat, while the decrease in the revenues for LimeRoad business segment, which 100% flows in as margins, optically reduced the overall gross margins by 60 basis points at company level. On a full year basis, the gross margins from offline business should remain at similar levels of last year as we continue to drive giving higher value to our customers and focusing on growth through volumes. Coming to expenses, while the overall expenses have decreased by 7%, the major shift is due to the reduction in marketing by 59%, which largely has come in from the reduced spends in the LimeRoad business, and also a very significant and strategic planned reduction in marketing spend in the offline business, which Lalit also talked about, that the increase in the customer trust quotient has definitely worked wonders for us, and that reduction in the offline marketing spend in the V-Mart business or Unlimited business is also close to 44%. The marketing spends will remain reduced on both the segments, online as well as offline, as we create better synergies through cross-promotion opportunities on the digital front for our unified Omni customer base without impacting sales growth at an overall level. Despite this low marketing spend, we have definitely improved our customer connect. Our NPS scores, which we have started to track since the last almost 8-9 months, have averaged at greater than 60 consistently. We've had more than 5 lakh Google reviews, averaging 4.4 plus. And that is a strong testimony to the value proposition and the brand trust that the company is able to generate. Coming to manpower cost, the manpower cost is up by 17% on the back of the annual increments, slightly higher ESOP expenditure, and also increased incentive payouts in line with the sales growth. And as Lalit mentioned, I think we have been trying to curtail attrition, which should effectively yield into better top-line growth and more efficiency going forward. There is definitely a higher focus on employee reward and motivation to positively influence efficiency, which should drive our overall profitability and growth. On the other expenses side, we saw a decline of 5% year-on-year due to some store lease renewals, which were earlier part of rental expense, being short-term leases till last year. But post-renewal have moved to interest and depreciation lines as part of the Ind AS 116 adjustments. The other saving is on account of reduction in the line road logistics cost, which is in line with the reduction in top line for the online business. Moving on to EBITDA. For the V-Mart core business, EBITDA for the quarter was 13.4%, with Unlimited at 18%. At the entity level, the EBITDA stood at 12.6%, which includes a loss of 10 crores coming in from line road, which is 60%. The EBITDA improvement has been a fallout of 60% reduction in loss from line road. Healthy like-to-like growth as well as positive impact from the closure of loss-making stores in the last year. On the capex side, we spent 26 crores during the quarter, or paid out 26 crores, majorly on new store openings and few store refurbishments. Inventory reduced by 144 crores quarter on quarter, helping improve the working capital cycle, and also it will help in improving freshness for the upcoming festive season even more. Free cash flow for the quarter stood at 43 crores. During the quarter, the company opened 7 new stores, 5 in North and 2 in South under Unlimited brand, and closed 3 Unlimited stores. The runway for the year is still maintained at 50 odd stores, a large part of which should be opened between quarter 2 and quarter 3. Most of the unprofitable store closures have already been completed now. There may be the regular 3-4 closures which may still happen in the usual course, but nothing significant. Coming to the last part on Line Road, Line Road continues its improvement journey with 60% reduction in losses year on year. This is the 5th straight quarter of continuous improvement in EBITDA losses for Line Road. The strategy on Line Road remains the same: extend Line Road as the fashion-forward omni arm of V-Mart and facilitate very easy order placement process by V-Mart customers through the Line Road app, initially for missing sizes or missing colors in offline stores, but eventually extending it to offering a bigger catalog of products which can be offered beyond offline retail. So getting into more and more mix of omni share. This is a long-term strategy, and we remain committed to enhance this offering with minimal loss funding or marginal profitability in the quarters to come. The losses in this business should continue to keep coming down quarter on quarter. Line Road will remain an important but financially a small non-material digital business platform for V-Mart. So that is all from my side, and let's request the moderator to open the house for questions.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone phone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Participants, you may press star and 1 to ask a question. The next question is from the line of Shirish Pardeshi from Centrum Broking. Please go ahead.
Hi, good evening, Lalitji and Anandji, and hearty congratulations for good sets of numbers. I think in the beginning, if I may ask, the footfall growth which we have reported in the quarter, which is 36%, which is very strong. However, when I look back, it is still lower than pre-COVID level. So just I was more curious if you think Tier 3, Tier 4 markets are firing well and you have reported 11% growth in Tier 3 and 19% growth in Tier 4. what percentage of this footfall recovery has happened, or maybe if you can split in tier 3, tier 4 specifically, if you can break down 18 million, what kind of footfall is there?
Suresh, definitely we have seen better footfalls. We are still unable to compare it with the earlier 5 years before footfalls. But still, I don't feel that the footfall is lower than the earlier footfalls. There was definitely always some reporting errors that we used to have in footfall. But otherwise, what we have noticed is there's a good amount of substantial growth in footfall. And also, you have to understand that since that period, the market has also broadened a lot, and there's a lot of retail and a lot of brands which has got open, and a lot of stores have got open. So it is more about qualitative customer. It is not about the customer who is just coming in. So it is more about quality customer which is coming in, and it is there. So don't worry. It is better.
So the reason why I'm asking, in the beginning, Laliji, you mentioned that there is a change in consumer behavior. So I was more curious if the profile of customers has completely changed because we have taken a pricing action. If that footfall is going to be sticky.
Definitely, what we have seen is these are very clearly we are showing element of trust. Consumers are always around us, and this is such a wildfire that spreads in this market. If you do certain good things, and what we believe, we have to continue definitely doing good things, sustain them, retain them, and bring in more betterment in what we are delivering and what we are doing. Footfall, I don't think is a concern, because if you understand this whole piece, this year you must have seen a reduction in advertising expense also. And we have not pulled in customers. We have not asked or pushed on certain promotion or certain discounts or certain advertising that we have tried to bring in customers. So this is a natural footfall which has got created. We actually did not do any advertisement in this first quarter. And it is just whatever that you are seeing on the advertising income is largely from the LimeRoad side, and the other pieces are also for the branding, which is at the store branding and store front branding and stuff. So, but we've not done any advertisement, and these results are great results, giving us more confidence that whatever initiatives and whatever betterment that we have done are all bringing in some result and giving customer the confidence to the customer, wherein they are spreading the word. They are becoming our brand ambassadors. And we have also started tracking some NPS scores and stuff. We're getting great reviews and great inputs. We're getting great Google reviews. So all of those are really helping us a lot.
Okay. No, I'm still harping on this number because even ASPs has dropped. So, and we also heard the another player, V2 Retail, has also reported a very strong set of numbers. So is the market which is down trading and lower price point is going to drive the volume? Is this the strategy which you will also follow, or there is a change in strategy and our core footfall which we have lost in between has come back?
There is no change in strategy. We had taken a price rise 2 years back. We came back. We reduced our prices last year. This year we have not cut down any more prices. It is only at Unlimited where we have cut down the prices because we wanted to attract new customers. But at V-Mart level, there is no cut down of prices. We have retained our ASPs, and we have no plans to cut down our prices. We still believe quality, good fashion, and right pricing is what we are focusing on. We are not driving on cutting down the prices and then driving customers. There is no such strategy.
Okay, that's helpful. My second and last question on the margin. After many years, we have delivered a very strong margin. So, Anand, the question is that two questions rather there. This LimeRoad, what you have done, 10 and 10.3 crore. Is this going to be a steady, or we will think the losses will come down? And how much confident you are that, because in a weak quarter we have delivered a good margin. So if quarter 2, quarter 3 is going to be a good jump in the festive season and marriage, do you think margin expansion can happen from here?
Yeah, Shirish. So on the LimeRoad side, we should definitely see quarter on quarter further reduction in the EBITDA loss. May not be very substantial, but maybe 20-30% EBITDA loss is something that I would definitely want to visualize and achieve. it's a strong work after already cutting in a lot of or already improving the efficiency significantly in the last 1 year. So it's going to be uphill task, but that is what the team is committed to deliver. On the main offline business in terms of margin expansion, see, Q1 is a good quarter. Q1 is not a weak quarter. Q1 is a good quarter. Always is a good quarter. Q3 is the best quarter, followed by Q1. Q2 is typically a weak quarter for us, with monsoons and with end of season sales, which is not a very festive period also. So Q2 typically is a loss-making quarter, and we should not see any margin expansion or any improvement there. But definitely, we should see betterment coming in from Q3 again. There should also be some betterment in terms of top line in Q2 and definitely in Q3. Otherwise, we are not looking at margin expansion in percentage terms. We will, as we have always stated, we would want to look at retaining the margin percentage but improving the rupee margin throughput through higher volumes and through higher top line.
No, the reason why I'm asking, because if I look at manpower cost has grown 17%, power fuel has grown 8%. So what are the source of this margin drivers?
So the source primarily is going to come in from lower discounting, also some like-to-like. We have seen good like-to-like coming in this quarter, and we should continue to look at improved like-to-like through improved efficiencies that we've been talking about of all the work that has been going on in the background, and that is something the results of which we have already seen in Q1, and we are also seeing similar kind of trajectory building up in Q2 and probably also going forward. So the HR cost increase is partially an investment and partially also a correction. But we are quite hopeful and optimistic that we will be able to contain this inflationary rise or compensate this with adequate amount of margin delivery through like-to-like as well as lower discounting through improvement in the freshness index of the inventory.
Okay. Thank you. It's helpful, and all the best to you.
Thank you. A reminder to all the participants, if you wish to register for questions, please press star and 1 on your touchtone phone. The next question is from the line of Sameer Gupta from India Infoline. Please go ahead.
Hi, sir. Thanks. Good evening. Thanks for taking my question. So firstly, sir, on the store addition targets, and during the call earlier you mentioned that you'll be looking to add 50 stores during the year. Now we've added around 4 stores. So that's a very large pipeline of stores that you're guiding for. So just a clarification, is this firstly a gross or a net number, and how many more store closures do you envisage at least in this year?
Thank you, Sameer. See, this is definitely a gross number. We are focusing on gross number. There's definitely a delay in store openings, but yeah, we are. This year also strategizing that we would want to open more number of stores just before the festivals so that we get a good run up, and most of the stores that we have opened up in the past during the festival period definitely gives us a better outcome even throughout the year. So some of those strategies also including, but yeah, you would get a good number of store count getting opened in this particular quarter and as well as the next quarter. So we will focus on those, and we have closed down some stores. There are still some 3-4 more stores that we may close down in the year. That's it. So that's where we are.
Great, sir. That's very helpful. Secondly, on the margin, so you've done a very healthy margin. I guess it's around 7% pre-Ind AS basis on the offline stores this quarter, and which is like quite healthy in recent times. However, we have reduced ad spends and we have not added a lot of stores in the last 1 year. We have closed down a loss-making stores also. So in light of all this information, when you resume the store addition aggressiveness, would you not say that the margin will have some level of downside from here on, and this is adjusted for seasonality between the quarters? Would you agree with this assessment?
Sameer, no. For us, till now, the experience has been that definitely there are costs that all the costs do not go into capex. There are some costs which do flow into the P&L. So there's some element, but otherwise new stores normally deliver higher margin. the new stores in the first year of operation deliver higher margins, not necessarily lower margins. So I don't think this is completely true.
Oh, okay. I would have imagined that they take some time to ramp up. So, anyways, maybe my understanding is incorrect.
You may connect Anand on one-on-one and you understand. And most of the time, the stores that we opened up are designed in such a way that the first year of operation itself, right from the second month, it should try and deliver the targeted EBITDA margin. So that's the way we plan the stores. But almost 80% of the stores get into that level. There are 25% of the stores which do not get into that level. But in the process, it also happens.
Great, sir. I get this clarified. So, lastly, sir, just if you could, I understand you have mentioned a lot of efficiency measures that you have taken, which is now showing in this like-to-like sales improvement. But if you could just list down top 3, 4, 5 kind of initiatives that you have taken, it would be very helpful. A little bit more on specifics.
There's no specific Sameer. It's retail is all about details, and you need to actually tighten at least 150 to 200 screws at multiple areas to try and get some benefit. But anyway, the majority of those are ultimately what consumer is interested in is product. So more around product. We have been really working hard on the product, on the design part, on the whole assortment part, on the whole qualitative part, on the pricing part. So some of those areas which we were working, you remember we had hired Carmi 2 years back, 1.5 years back, and then there's a lot of work that they did, a lot of changes they proposed. Last year we tried to implement those changes. Due to change management, some of those got decisions and then moved. Not everything got implemented immediately. But otherwise, there was also last year that you remember we had moved our warehouse into a new property and a new warehouse. Now the new warehouse is ready. Some of those initiatives that we implemented in the new warehouse, in the automation side, some of those pieces came in. Supply chain management, technology over supply chain management, some forecasting rules, some allocation rules, some of those which creates a better understanding on consumer persona, which gives us a real clear edge on the seasonality, on the customer type of the market. So some of those pieces which is driven through technology and driven through the automation processes that we implemented at the warehouse, bettered our turnaround time at the stores, reduced our inventory, increased our freshness. So our freshness increased itself gave the customer a more fresher variety. So some of those things actually brought it. And then people, and definitely people is one key element which really has given a lot of support, and then their motivation, their chargingness, lesser attrition. Some of those pieces definitely brought in good inputs, and then lot more to be done. Lot more has been done in the process in multiple areas, but lot more are still to be done, and then results are still awaited.
Got it, sir. This is very, very helpful. Thanks for taking all the questions, answering them, and I'll come back in the queue for any follow-up, sir.
Thank you.
Thank you. The next question is from the line of Rishi Modi from Marcellus. Please go ahead.
Yeah. Hi, Lalit ji. Hi, Anand. Am I audible?
Yes. Yes, Rishi.
Yeah. Hi, so just on the employee cost, right, how much of this employee cost would you say is non-recurring nature, maybe some one-time retention bonus or something?
So Rishi, I would not want to call it out as one-time changes. I think what we are trying to do is something slightly more sustainable. I would like to see this kind of, at least the current cost that is there in Q1 to get replicated. This is some part of this, or large part of this is also variable cost. So if we achieve, we provide for more, or if we pay more. So thereby, it's not a fixed cost increment. It's also very largely linked to a variable kind of incentive, or even our ESOP cost is also linked to performance. So a large part of the changes that you see in this quarter in terms of increase is coming in from variable increase, and that is what we would like to continue. There is no significant one-time change that should be there in this quarter cost.
Okay, got it. And just on this LimeRoad employee cost, right, we've seen a decent decline coming into Q4 on LimeRoad.
but Q1 we are seeing a sequential jump of almost 250% odd. So just is there an ESOP cost lying there? Because I'm under the impression that a lot of the senior management of LimeRoad is no more with us.
So
Hence the ESOP would be 42.
Our cost has also come down. It's not gone up. In fact, the LimeRoad Q1 cost has come down by 14%.
Not on a year-on-year basis, on a QOQ basis. If I'm looking at Q4 numbers, I have 27 million as the cost.
There's an adjustment because of the ESOP structure, but otherwise, at an overall basis, there has been a marginal reduction in LimeRoad employee cost. Maybe the comparison that we are seeing from Q4 to Q1 may not strictly or truly reflect the true changes, but at an overall level, the actual employee cost at LimeRoad has marginally come down. Not substantially, but marginally come down.
All right. And
Rishi, just answering your question on that, the management cost, the management which went out at the LimeRoad, their cost of ESOP was actually not accounted because the kind of performance that they were delivering, actually those ESOPs were not able to, that was not a cost to the company. So it never got executed. So that is why it is not coming out.
Got it, sir. Just Lalitji, wanted to understand this LimeRoad physical store format. You mentioned some comments in the opening remarks that you're trying a more Gen Z kind of an offering here. But I think it's been operational for maybe a month or two. But what are your learnings in terms of what's data telling you out there? If you could just versus say an unlimited, what's the difference there in the South India market for LimeRoad versus unlimited? If you could help me with that. Hello?
Definitely, it's a new testing for us. We've been trying with some multiple experiments in terms of the range, in terms of the product lines, in terms of the design, in terms of the basic belief of what the customer is, who the customers are. Little bit of change in the internal ambience. So we've got we selected only a tier 3 town. We did not go for a tier 1 town for all of those. But still, what the response that we're getting is encouraging. It's better than a usual unlimited store that we would have opened as of now. It has been only 18-19 days since we have opened. We have very, very immature time for us to really respond on those. But we look at a lot of positivity, a lot of learning is coming out, and it is also driving a lot of omni-channel mindset. And we saw a lot of existing customers of LimeRoad who were shopping on online. A lot of them came in, so we saw a good amount of customers who were shopping online and coming to offline. So the trust over the brand was there and then has been solidified. So good learning coming in. We are yet to get into all the analytics. So we'll definitely update you.
And the team that's going to be running this experiment, it's separate from the V-Mart backend team, or like is there a bifurcation, or is the same team who will be managing the operations, the inventory, all of that stuff?
There's a part of team which is different, but most of the teams are common. So part of the team which is on the backend side, on the whole design and the procurement and the buying. So that particular team is little different. But other than that, most of the team is common. Most of the internal team members only elevated themselves, created a new style, new thought process, and new design, and took up the challenge. And kudos to the entire team who really made it happen.
All right, sir. Thank you. That's it from my end here.
The next question is from the line of Kunal Bhatia from Dalal and Broacha Stock Broking Limited. Please go ahead. Mr. Bhatia, your line is unmuted. Please proceed with your question. As there is no response from the line of the current participant, we'll move on to our next question. Our next question is from the line of Sabyasachi Mukherjee from Bajaj Finserv Asset Management Company. Please go ahead.
Yeah, hi. Thanks for the opportunity. Good to see some great numbers after a long time, Lalitji and Anandji. My first question on the, if I look at the conversions, I think it is at probably at historical lows, below 50%. It slipped below 50% in last quarter, 49%, and slipped further to 47% this quarter. While the footfalls have surged sharply, but how should one read this data point about conversions? If you can help us.
Yeah, hi, Sabyasachi. Good point. And see, we have been always narrating this fact that there is a different methodology and there is a little more compliance over footfall reporting that we have instituted, because we believe and we all know that most of the shopper comes in couple or three people together and buy, and it doesn't become one or two people. It doesn't go more than one. So normally the conversion rate should not be greater than 50%. Is what my internal belief is, and that is what we are forcing our team, because this is still a manual process. But still, I would also say that because of more retailing around our stores, because of more retailing in the same market, people want to definitely go back from our stores, check other stores, come back and then buy. So there is some amount of discovery which consumers are making while traveling multiple stores also. They don't end up shopping the first store that they get into. So some of these pieces we also saw a lot of customers going back and coming back to buy, and then going back once and then coming back again to buy. So some of those things we saw, which definitely for us, largely we believe in taking up the growth in cash memo, and how much cash memo has the growth and how is our average bill size moving. So that's the major indicator that we have to focus on, and that is what we are doing. We still believe that better service quality at the store level. We have also somewhere brought down our convincing attitude, where we used to convince customers, talk to them more, pressurize them more. We don't want to do that. We want a pull factor to get created. So that's what we are also trying to do, so that the customer comes back by their own, if they like the product, if they like the prices, if they like the services. So that's the kind of model that we are getting into, so that we don't force or empower the consumer with our employees more. So that's the whole process that we are getting into.
Got it. Understood. I understand the fact that probably 5 years back there was not more options to the markets that we operate, and now there are several other options and people are checking out other options. I was also wondering, does it the freshness index of the stores does it also matter? If let's say a store is for us gets refurbished or refreshed, does it pull more customers?
It does, Sabya, because if the store looks better, it definitely pulls in more number of consumers. Because even we tried experimenting with new consumers, because this year we also tried to focus more on digital advertising and stuff, and try to bring in customers, because we never did lot of print ad or lot of those outdoor advertisements. So we tried to focus more on some organic kind of content. So which also brought in a lot of new consumers, a lot of new customers who wanted to first check in, come in, check in, and then go. And then definitely a lot of these developments that we did in terms of our facade opening or renovation, and because re-engineering of the front view of the store. So some of those things definitely attracted a lot of footfall and new footfall.
Got it. Lalitji, the other question that I had is, in your opening remarks, did I hear you right that you mentioned that some of the national players' value formats are also seeing some sluggishness when you are talking about the competitive intensity? Did I hear you right?
Yes, Sabya, I'm right. You're right. There is some pain with a couple of retailers also who have not been growing in line with what we would have done, and not necessarily everyone is getting a lot of growth. So there is some pain in the market also, which we are seeing. So this is what I wanted to explain, that it is just not driven by market. It is also initiatives and efficiencies that a brand brings in, or the better value creation that a brand does for the consumer.
Got it. That's very clear. Thanks, Lalitji. Thanks, Anandji. Wish you all.
Thank you, Sarojit.
That's all from my side.
Thank you. The next question is from the line of Nikunj Gala from Sundaram Asset Management Company. Please go ahead.
Yeah. Thank you, everyone. Firstly, just want to understand on the working capital side. Sorry if I repeat this question, but from the there was a significant improvement specifically on the inventory side. How one should consider from the going forward perspective, what is the steady state working capital cycle one should assume here in the V-Mart case?
So, Nikunj, definitely we are working on basic fundamentals, and basic fundamentals are trying to reduce the inventory, better the efficiency of inventory, have the days of inventory under control. Those are one of the basic parameters, and then definitely have a better cash flow, because that is also very, very important, and have a positive cash flow. So I think the team has really worked a lot, and we are trying to, and that's everything about creating efficiency, and it is also about freshness. So all of those together, most of our capital investments have reduced. So the creditors, we don't have those kind of purposes also. So and the inventory management has been also very, very tight and very, very good. That is also bringing some results. So we should expect a little more betterment from our side, but it is also going to be seasonal in nature, because if you look at Q2 numbers, it will show a little more business there, because the working capital will grow there, because that is the inventory filling season, and we will fill more inventory. So the inventory levels will go up in more. So it's more seasonal also, quarter on quarter you'll see variation, but yes, then you'll see improvement in every quarter.
Sure. Thank you. And secondly, from the product assortment side, since you mentioned, and we also, understand that there is a lot of competition coming in. So how are we approaching the product assortment, at the store level? What are the kind of fresh, inventory we have, or, what say 2022 inventory won't be there in any of the store? What kind of a strategy we have on the product assortment side?
So because we really worked very highly on the whole freshness index, and the freshness is the inventory freshness, and that has been key to us, and that has also resulted into some margin losses, because we've also cut down inventory, trying to liquidate inventory at a discount. So our freshness index has bettered by almost 10%. So that's something that we really have worked on very hard. You would also see a higher shrinkage numbers that is very important, because our provision policies and the provisioning that we are doing on the little aged inventories have also been very steep. So we are trying to really work very heavily, because we now understand and believe there's a lot of change which is driven in fashion business, and there's a lot of change in the assortment that we used to sell earlier, and any brand used to sell earlier versus what is selling today. There's a lot of fabric change, a lot of pattern and fitting change. So some of these things is making this business a little more agile driven. So we are trying to get into more agility, and we are trying to make this assortment look much more better and much more fresher. So that's the area of work that we are doing. We still have not reached the desired goal where we could, but we are working all towards it.
Sure. And just lastly, since there is a lot of hopes going into festive, and the H2 to be a better one, have you seen any similar kind of trajectory in the last 1.5 months, or if you can comment on that? That will be my last question. Thank you.
Because we believe the betterment that we are trying to bring in should continue our performance, and we should continue with our performance, and that's what we continue to do. We still believe there's a lot of opportunity. We haven't still done. The glass is half filled, is what I always say. There's a lot more to fill in the glass. There's a lot more work to be done. If the team is able to stick their neck out, do all of those things, it is definitely bringing more complications, more variety, more change management which is required. So all of those driven, we should definitely get those benefits, and then we should definitely come up.
Okay. Thank you, sir, for your inputs. Thank you.
Thank you. The next question is from the line of Ronak Khetan from Ishanika Securities. Please go ahead.
Thank you for the opportunity. I have noticed our strategy is very much focused around tier 3 locations. So I just wanted to understand what is our right to win strategy against the traditional mom and pop stores. So apart from having an extensive inventory base, what is our strategy in terms of non-apparel sales? So expanding the SKU so that a consumer visits and gets almost everything at the store. So apart from the apparels, what is the kind of base which you want to offer? Number one. Number two is the kind of loyalty program which we are running specifically for tier 3 locations. Like, I mean, are we running a loyalty program, and what is the kind of enrollment in it? That's about it.
Yeah, Ronak, so very fundamental questions. I mean, we have been narrating these questions and answering them for the last 1 decade, but anyway, I'll do it again. So our model definitely is a unique model, or not a unique model anymore now. It was unique 10 years back, but now a lot of players are trying to play on that model. And the mom and pop, definitely, you understand those bazaars which run in small town. Those are 800 to 1,000 square feet or 500 square feet. There's a counter in front of that. The mom and pop has their own small variety, small process. Their ability to purchase and buy or source from the market or good manufacturing is very low. Their cost of purchase is very high. Their ability to sell the consumer, give the quality confidence and have that quality mindset is also very low. So all of those included, the experience of the consumer who goes into a mom and pop store is largely true because of relationship, but it is not more because he gets a great variety. But there are areas, there are products which are more regional, more seasonal, more ethnic in nature, where the local taste is very important. And all those areas, mom and pop do act as a great retailer, and they are very successful retailer in those kind of areas. Like for example, sarees. Mom and pop retailers are very good in those areas. So we are still not better. No one is better in that area. So there are areas where mom and pop have a strength. But other than that, mom and pops are not able to create that kind of largeness, that kind of variety, that kind of transparency, that kind of quality, trust, and that kind of product. So they have a very small team. They are not able to showcase so much of product. They are not able to replenish and replace those products very fast. And the pricing is also, most of the time, our selling price is their cost price. So they are not able to convert that also. And other than that, I think for us, it is very, very important to believe in quality, believe also in agility of fashion, because internationally, whatever is running and whatever is selling in Los Angeles or Milan or Turkey, in Istanbul, so everything is now becoming the bridge. The gap is becoming so narrow; it is getting bridged very fast. So one has to be very, very tight on this. As I'm talking, I'm right now in Istanbul and certain exhibitions. We are following those market trends. We are going out in those markets to understand what's happening in all of these markets. So all of this is very, very important, which is not possible for a small retailer. So I think that is where we are really looking at. I forgot your last question. What was that? The second question.
So my last question was around, do we have a loyalty program in place? So the repeat consumers who are...
So we've got database for more than 40 million customers. And we don't operate a loyalty point-based program, but we have their mobile number, we have their communication process, we have proper process of analytics and driving customized loyalty program or customized solutions for them, customized offers